Hi, here's an update for February 27th. The S&P here and the 3.5 year cycle in red. Now I will speculate a little bit here. First I'll focus on the S&P in blue here. We have, as described in the previous video, I'll put a link in the description. At this point in the cycle we often have the shakeout, and the trend line of the cycle is ideally drawn from the cycle low and then to the shakeout and then extend it up. So normally here we would have expected something like this action here in blue and not this COVID panic, and then the shakeout here. So let's shift the focus to the orange line, the 25-week shifted S&P. Here we see the 2018 low. So we would have expected this action here normally, and the shakeout here, and the trend line of the cycle from the price low to the shakeout. So let's pretend that the COVID panic never happened, that we had this instead. So we had the shakeout low here, and we put the trend line there and extend it, and look where we made a low just now last week, just at this trend line that is not so obvious to see, but that is perhaps the essence of this cycle, and this wasn't supposed to happen. It happened and it may have consequences, but yeah. Also I think this election pullback here neither was supposed to happen, and we'll come back to that later. So from this we have not maybe really broken the trend of this cycle. We shift the focus back to the blue line and the cycle, and we see the cycle favors upside for the coming period. How certain is this? I looked at the previous cycles, the 7-year cycle, and we see the bias is not that decisive for the upside. We have 3 of 10 fell the next month during March. We have many that were pretty flat, and we have 3 times with big upside that produces this cycle to go so steep upwards here. But it's not that certain that we have the upside here. Anyway, in the previous video I said the cycle here is not meant to be used for all these small turning points. It's more a general view. Where should we expect the top and the shakeout and the low? So I did some analysis of previous bear markets, and I think we should shift the focus to how do bear markets look. But first, is the top in? It's not that certain. As I showed, we have maybe not broken the essence trend line of the cycle, but I looked at some different indicators. We have broken below the 25-week FLD, the shifted index. That's a big warning sign, especially at this point of the cycle. But the 40-week, we just found support there. Now what does this mean? If we break below this line, we will have descending 200 simple moving average. That's often a definition of a bear market, if the 200 MA is descending. But we have not seen that yet. We found support and we went back up, but the fact that we are testing this level at this point of the cycle is a very strong sign that we won't make another all-time high. But it has happened before, so it's not decided yet. Also here I look at the 100-day retrace, and we had a pullback of more than 10%. Again, at this point of the cycle, this weakness is like 80-90%, means the top is in, but not 100% sure. So I looked at bear markets. So here are the 7-year cycle bear markets drawn from the price high, and as we see the blue our current situation, if we had crashed down with the Ukraine war, we would have followed the 1987 scenario or the 1929 scenario. But that's quite unusual, and looking at the more normal scenarios, we found support where we should have expected it. So this looks messy. What can we draw out from all these previous examples? Well, I found a pattern, and I divided these in two groups. So we have one group that would suggest we may continue down, make a double low or a lower low in March, and we have a pretty large rally almost up to the all-time high in May before we go down again. I would call this this would not be the most bearish scenario. The more bearish scenario is that we make a lower shoulder in March, maybe as early as in just 1 week around the non-farm job numbers, and then we have the FOMC meeting around here. If that's interpreted bullish, we could have another top later in March, A, B, C, or it may stop here in just 1 week and we go down and bounce around and go down. So I made two scenarios for this. Okay, I have the cycle here, S&P in blue, and here I have drawn the average of these two scenarios. Now the background here is the 25-week shifted S&P, and as we see, we have broken below, and as long as we stay below, there's danger we crash down. So the scenarios suggest either, that's my main scenario, we make a lower shoulder in March, we rally up some more, and then we turn down. The other scenario is we go down, make a double low, a lower low in March. That could actually be bullish from these scenarios, and then we make a top in May, almost testing the all-time highs before we turn down again. Here I have drawn a similar chart, just here is with a 40-week FLD, and as we see, we found support at this level. So yeah, to confirm this is a bear market, we have to go below the low we had previous week. Either we bounce just for a short time and break below, or yeah, we may find support at this. That would make this a firm support maybe, and we could make a longer rally into May. Okay, at last, look at a short time cycle. This cycle is not the lunar cycle, but it's very similar. So the current situation, we are close to a cycle high. Now I could mention sometimes we see two of these cycles merge, like here. We didn't get a real cycle low here, but here, and it happened again here. Two cycles merging. We also see an example of call it inversion.